Hello and welcome to all our valued clients. We're bringing you an industry update, particularly focused around market disruption in a period of extensive change for our food and drink clients. I hope you're all well and safe in these challenging times. And I especially wanted to mention our seafood clients. We were looking forward to seeing you at the Seafood Expo, which was due to take place recently. However, unfortunately, due to COVID-19, that's been cancelled. But I just wanted to say that we're here to support you and we'd love to hear from you. So please reach out if there's any way that we can help. In this presentation, we're going to hold a brief update. We'll be looking at the current COVID-19 crisis and what it means specifically for the food and drink sector and our valued clients in this market space. So the COVID crisis has caused unprecedented challenges, not only for the food and drink industry, but for industries across the globe. And many businesses are facing a lot of turmoil due to economic and political upheaval due to the COVID-19 crisis. So what is the current state of play? Well, the COVID virus has had a huge impact. It's had a huge impact on rates, with central banks cutting rates, and particularly flight to safety. Initially, we obviously saw a relatively strong US dollar move as people were adjusting and selling off some of their emerging market assets. We've seen EM come under pressure as people were worried about what the underlying impact was going to be from the virus. We've had concerns about the length of the lockdown and how we're going to exit that, and how much output will be lost, and how quickly that can be recovered as we recover out of the crisis. There's been huge fiscal and monetary stimulus packages announced from governments and central banks around the world. This is causing a lot of equity market volatility and uncertainty around the packages and around the impact of the virus as well. We've seen widespread closures in large parts of the economy, particularly affecting sectors such as retail, travel, entertainment, and manufacturing. And against this backdrop, obviously, there were a number of ongoing factors that have been a result of the virus, or were rumbling on in the background. Obviously, the trade wars and war of words between the US and China was impacting and creating some uncertainty and volatility prior to the coronavirus really starting to bite. The coronavirus and loss of capacity and output has had a huge impact on some commodity prices, particularly the historic collapse in the oil price, and the oil price war between certain geographies has had an impact not only on oil prices, but also on various currency pairs. And then still rumbling on in the background, obviously, is the Brexit negotiations. So we still have some serious concerns over the exit negotiations at this very difficult time. It looks like a very inopportune time to try and negotiate. This continues to weigh on sterling, and we are, as we move through this process, that we may see some further in terms of the impact on sterling. So what does this mean at a more granular level for our food and drink industry? What we're seeing is there are a number of headwinds that they're facing, both in terms of demand and supply side challenges. One of the factors that we have seen is consumer stockpiling. Consumer fear is driving some very unusual buying behavior, including not only stockpiling, but switching products and retailers, and is testing retailers and supply lines to the max. We've seen some huge logistic challenges. Supply lines are facing unprecedented challenges in terms of delivering product, with over 50% of the food consumed in the UK coming from abroad and 30% of that from Europe. The industry is really struggling to keep pace with demand, and some disruption here seems inevitable. I'm sure many of you have seen some of your personal favorites and staples disappearing from the shelves, and that is creating, mostly due to at this stage due to logistic challenges. We're also seeing some major disruption to the movement of people. We've seen there's a possibility of seeing a relatively sizable seasonal labour force disruption caused by the crisis, and this may lead to shortages of labour as we come into the summer harvesting season, and that could have a serious impact on supply. There are other major labour-dependent industries, such as the fishing industry, that may face labour shortages and may struggle to keep up the supply-demand balance. And so there is a possibility of some seasonal disruptions in terms of product as we move through the summer. And on the demand side, we are seeing some customers changing buying patterns and tastes, and this may lead to some unpredictable demand-side shocks. I'm sure anybody who's tried to buy some flour recently will see that people are switching away from buying, loaves of bread and start to want to bake their own. And this is causing some strange and unusual buying pattern behavior changes. So these changes are leading to increased uncertainty and can make managing FX and cash flow elements of your business increasingly challenging. So many of our food and drink businesses are operating in highly competitive areas and as we migrate through the crisis, the increased market volatility is seeing large moves in many currency pairs. And this is posing some difficulties and challenges in terms of managing the risk in a particularly low margin business. It's therefore increasingly important for businesses to keep on top of their FX risks and to ensure that their businesses are actively looking at their hedging program and protecting against any negative FX movements that can push up costs or indeed erode profitability. As we mentioned, obviously, one of the most important blocks for the food and drink sector is Europe. And as you can see from this sterling against euro slide, in the last 3 months, so February through April, we have seen some very increased volatility and heightened volatility. In fact, if you look at the high to low range over this period, we've seen a high of 120.81 and a low of 105.11. And that high to low is a 13% range. Now, obviously, when you're thinking about businesses that are operating in highly competitive environments or in very low margin environments, that can have a serious knock-on impact in terms of pushing up costs or altering your cost model. So just to put that in perspective, when transacting 1 million euros against sterling, this high to low difference could result in a difference of 123,600 pounds in terms of that one-off transaction. When we look at sterling against the dollar, the impact is actually even more pronounced. Over the last 3 months, we've seen a high to low, a high of 135.14 and a low of 114.09, which is a 15.5% high to low range. So again, when transacting $1 million against sterling, this translated into a difference of 136,500 pounds, which may be very, very significant for low margin businesses. So moves of these magnitude can make or break some businesses, and it's highly important to pay close attention to the FX moves and ensure that they're having the least impact on the business that they can. So how should businesses really be thinking about the current market moves and the current market volatility, and what should you be thinking about in terms of your hedge program? Well, the first thing really to think about is you need to be dynamic. You need to be constantly on top of it and looking at a number of factors. What are your hedging objectives? You need to understand your risks very clearly. You need to understand what the market is presenting you with and the challenges that that presents. You need to understand your hedge product in detail. And I would recommend that you always engage with a specialist. Moneycorp is here to help. We have a number of experts in this sector that could help you tailor a specific hedge to meet your requirements. So just on a more granular level, how should you be thinking about establishing a dynamic hedge strategy? One of the things to think about where volatility is high is what is your forecast requirement versus known volumes? So in other words, what I'm talking about as we see those supply and demand shocks, you should seek to remain as flexible as possible and maintain an adaptable and dynamic approach. In other words, constantly look at your hedge program, readjust those hedges if volumes are dropping or increasing, and ensure that those are still fit for purpose through the entire life of the hedge. You should look at your FX budgeting rates and adjust them accordingly as the underlying FX currency pairs move. This is important as it ensures that you are constantly focused on the market volatility and the challenges it's presenting, and also enables you to have a look at your worst case FX scenarios. So you should look at a trending move of 10 or 15% and see what would happen to your hedge portfolio and your underlying product should you see some very large foreign exchange moves alter your supply and alter your supply and demand dynamic, to understand how that's impacting your underlying hedge program. Can you alter your pricing if needed? So how flexible is your pricing at an end level? If there's flexibility and FX is pushing up your cost, you should try to pass on that pricing as quickly as possible. It's also important to maintain some flexibility in terms of the notional amount and the tenor that you're hedging, which means that should you not require your full size of a hedge, you are able to extend the value of that or reduce the notional amount that you had, or in other ways, adjust your hedging to ensure that it's fit for purpose and is meeting your objective. So, in terms of product selection, we would suggest that you consider a need for protection versus flexibility. And in this instance, there may be products that could be better suited to a high volatility environment, enabling you to have some flexibility as demand and supply shocks impact your business. So you should really understand your product and study the merits and risks of all products to ensure that your hedge strategy meets your objectives. And these should be, I can't stress this enough, continuously reviewed through the entire life of the hedge. This would ensure that not only are you meeting your demand and supply side changes, but also the product that you've put in place is meeting the hedge objectives that you had set. Moneycorp has a wealth of experience in helping the food and drink industry, and indeed all our clients, put in place suitable, flexible, and robust hedge programs. And we have experts in all of these fields. We have a full product suite, and different products might be important in a more unstable and volatile environment. So for example, switching to an option-based strategy may prevent you from becoming overhedged at a time when you least need it, and can offer you a greater degree of flexibility to meet your objectives in terms of movements and supply and demand dynamics. So just in terms of final thoughts, where can Moneycorp be helpful? Moneycorp has a wealth of experience in improving processes around international payments and helping you reduce the cost of international payments to your business. We have a huge experience in controlling currency costs. We have highly competitive rates and access our liquidity from 17 core providers. We give you free multi-currency accounts. This is important as it gives you the ability to hold funds on account for international payments. We give you access to 34 currencies available via the Moneycorp online portal, allowing you full autonomy online. And we have the ability to allow you to make payments into more than 120 currencies via your own personal dealer. In terms of our industry experts, we can help you to build a dynamic hedge program to protect your business from current FX volatility that we're currently experiencing. And the team would very much like to assist you in navigating the current turbulent times. On the last page are my contact details. Please reach out if there's anything we can do to assist you. Indeed, we'd love to hear from you in these difficult times. We've also included a link for further information where you can download our white paper on the challenges of COVID-19 to our food and drink industry clients. We'd very much like you to have a look at that and tell us what you think. And if there's any way that we could be helpful at all, please reach out to us and make contact. Thank you very much and stay safe.